Do you at Blackstone, do you think, have a comparative advantage in capital, access to capital? Because we hear about a lot of big players, particularly private credit is really all the rage right now. But do you have a comparative advantage in your access to capital that you can deploy quickly?
I think we certainly do, and I think that's really one of our calling cards. Today we have this unique privilege of having $65 billion of dry powder across just our real estate complex. And that puts us in a really unique position to do things that other people can't, particularly in moments like this when capital is short and hard to come by. As you know, we raised a $30 billion global opportunistic fund, which closed last year amidst all of this volatility. And I think the reason we were able to achieve that kind of a fundraise is that we have a track record of delivering through cycles. We've done it for over 30 years. Through that strategy, we've produced a mid-teens net compounded IRR on over $100 billion of capital. And our investors tell us that they want to concentrate their capital with their best managers. We're one of those folks. And what that enables us to do when you have this kind of capital is move with speed and certainty and take a long-term view and get deals done when other people are nervous.
And what about access to further capital? I mean, you tapped into the retail, if I can put it that market, through BREIT, which had some adverse publicity for a while. You've got some good news on that, actually, now. Where are you with BREIT?
We could not be more proud of what we've done with BREIT, how we've built it. And it starts with performance. Since inception over 7 years ago, BREIT has produced an 11% net annualized return, which is twice the return that's been produced by the listed REITs during that same time period. And the reason for that is we own assets in fast-growing sectors: warehouses, driven by e-commerce; data centers, driven by AI; rental housing. And at the same time, the portfolio is in the Sun Belt, the fastest growing part of the country. And I'm really pleased to report, as it relates to redemptions, that in the month of February, we paid out 100% of redemption requests. And all customers who have sought liquidity from BREIT since inception have received it. And in that respect, BREIT has done exactly what it was designed to do, which is offer premium returns, a higher rate of return in exchange for a measure of liquidity. And the reason we've been able to do all of that is because BREIT was structured the right way, a semi-liquid vehicle that is not a forced seller of assets. We own the right real estate with strong cash flow growth, and we manage the business with ample liquidity. And as we look forward with BREIT, why we're optimistic, among many reasons, is simply that the deployment opportunities are getting more interesting in this moment of volatility. We're not waiting for the all-clear sign to deploy capital from BREIT, and we've got some really exciting transactions that we've recently done and that are in the pipeline.
So talk about geography for a second. And particularly, you mentioned Europe earlier. Europe has had its share of troubles economically in terms of growth, in terms of inflation, things like that. What opportunities do you see for you, Blackstone, in real estate in Europe?
Sure. I think sometimes people are surprised by the fact that our most active region globally has been Europe, in light of a sort of nominal backdrop GDP growth that's been quite flat. But what it turns out is that sentiment is so negative today and liquidity is so short that you have folks who need to raise cash. And so we've been buying from groups who, for whatever reason, are willing to part ways with high quality assets in this moment. But we're buying at prices today that don't require us to believe a V-shaped recovery. And so just as one example, we're acquiring warehouses throughout Europe. We've acquired 4 billion euros of warehouses in only the last 12 months. And what we see is deep value. And as we look forward, we think that buying opportunity in Europe continues because there are very few folks who have the scale that we do who can compete with us across the continent.
So to be clear, your investment in real estate in Europe is not necessarily a bet that Europe's going to come roaring back as an economy. You think it can sort of, I'll put my words, not yours, muddle along and still you'll get a return on your investment?
Indeed, that's exactly the premise of what we're seeing in Europe. It's that you don't need to believe in a sharp economic recovery. What you do need to do is take a long-term view based on supply demand and based on value, and be aggressive in a moment like this when everyone else is nervous.